Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is August 19th, 2024. And we're, of course, going to look at Bitcoin here on the daily. And then we'll also talk about that weekly close. Now, next week, we are going to be talking about the monthly. And that's going to be pretty important, at least, to understand where we want to see if we're bullish, things close the end of August into September, or if we're bearish, where we want to see closes come in. Now, in this case, we're going to look at the daily. I do have the line chart on here. I could discuss this, but I think it's actually a little bit more beneficial for those that are not just already kind of steeped in TA, but those that are new to keep their eyes on the actual candlestick chart. So we're going to talk about, kind of where we left off on Friday's video. And that is, we're looking for a bullish structure to form. And if we're looking for that to form, we need to see a higher low swing and preferably a higher low close anywhere above this $54,000 lower low close. So essentially what we're looking for is, we have the big downtrend break from this uptrend, big downtrend break, lower high. We want to see higher low and then higher high, which means we need to see closes above that 62,755 or 62,800, as I typically will call it. I would give it some room. Want to see a daily close above there. That would break this overall structural downtrend. And if it comes on a higher low, then we have a trend reversal because we would have a higher low, higher high once we see closures above this 62,800 level or wick high. Now, even locally, we could, we've had swing lows to swing high, swing low, swing high, swing low, but we haven't seen a closing low set. This was not a closing low set. This was not a closing low set. And in fact, this turned around, not even setting a closing low. It did try up and ended up setting a lower high. So this is actually, even locally, we could see a little bit of a local downtrend break here on any closes above. This would be Sunday's wick high above 60,284. Now, this is a pretty important level that I'm going to show you when we get to support and resistance, but we are going to work our way from trend to support and resistance. We'll talk about volatility, and then we'll follow up with what those three create, and that's momentum. Now, in this case, if yesterday's low holds, that would be around 57, looks like 50, I'm sorry, this was actually 868. And, if that holds and Bitcoin can stay above, this is actually a basis band, but especially on any closes above this 60,284, technically that would be a local downtrend break. That would be a structural break. I still need to see closes above that 62, 755, 62.8 region on the daily, but this would set a closing low finally on any closes above 60,284. So the next thing that we would look for is, a run essentially to 61.8, which is the close open high that was set up here, and then 62.8, which is the wick high of this lower high over here. So we do have this swing downtrend that would break. But, I want to see this not only set the low on a close, because we already have a pretty large swing low down here at that 56,120. But we need to see then closes and a trend reversal start to occur on the daily on closes above 62,755, 62.8, depending on your chart. So that would be the trend breaking structure that I'm looking for. What you don't want to see is Bitcoin starting to trade back below, Monday's low. That would, it could stick around locally and go sideways and consolidate, but that would, paint the picture that we're starting to see things possibly test down towards the close open here at, this is 56,867. What was this wick low? What did I say it was? So did this actually, am I reading the wrong thing? Hold on. This might be, I might be getting the wrong read on this. I'm sorry. So the actual low from Monday, and I thought it was wrong when I was saying it was 57,820. You don't want to see any kind of price action below there, because then it's going to start looking like it wants to test down further into the 57.5, possibly even 56,120. So my apologies. I was reading the lower first standard deviation, which technically would be, the main volatility level, but we'll talk about volatility a little bit later. And you can see it's right around the low side structure. Sorry, I spent all day talking today and I didn't really give my voice a rest before recording. That's most days for recordings, I guess. Anywhere below, the wick low at 56,120, and we're looking down to essentially the $54,000 level and lower if it does start to breach down below there. But there is a chance for the bulls. Today, you want to see closes above 60,284, and that would at least set a closing low and then look as though Bitcoin wants to test up towards the 61.8 and possibly try to break the downtrend at 62.8. So that 61.8 again is the close open here, and you can see this resistance has been pretty strong here with all these wicks coming in. So that would be a good recovery above 61.8. I would be looking right to 62.8 thereafter, even in lower term timeframes. So let's go ahead and take a look at support and resistance, get that on the chart here. We're going to use, we might as well turn on the trend scenarios because this is playing out essentially what I was talking about. Put higher lows in and then try and break the downtrend. But in this case, we're going to take a look at accumulation distribution. This is basically the local support and resistance chart. Let's get rid of the Landy bands here, indicating the volatility levels. And let's talk about, where we were when we left off on Friday. And that was right here where Bitcoin had, as mentioned before, any kind of closes below the 58,400 level, even in like the 4 or 6 hour close opens, I was looking for the run down to somewhere around the 55,850 level, which is the close open lower low down here prior to the $54,000 lower low. And in this case, we did see that the Wednesday into Thursday candle, we saw it start to break down once the Thursday candle opened, and then it ran down. Essentially, I called that target hit on Friday, and it did close back above 58,400 on Friday. Thus, where was the next level we were looking for? Well, it was right up here to that 60,263, 60,002 to 300, basically. We saw that get tested on Sunday, rejected. Where did it end up getting its close open? Right at the 58.4 level. We saw Monday dip down a little bit to that 57.820, and then get bought up, closed, essentially where the Sunday candle opened, and now tested back up to this 60,300 level. And go figure, 60,200 to 300 is essentially the wick high here, that 60,284. So closes above 60,300, and you can see that the zone is pretty big here at 60,300 to 63.8. So that's again giving us the confluence that we would be looking up to somewhere around 61.8. Could it? It's already basically tested the close opens here, so it wouldn't take much to test $61,000 and then 61.8 up here, and we start seeing even medium-term timeframes closing above 61.8. To $62,000, I would immediately start eyeballing this lower high over here at 62.8. Above there, the overhead resistance at around 63.8 to 64K. I would give it some room, and this is going to be kind of the zone. Now, again, these gaps between the zones are kind of no man's land, and this is proven to be no man's land when it's kind of oscillating between key levels. So the next big area above 63.8 is actually 65.5 to 67.272. And again, I've pointed this out a lot. The 65.5 is just above the first wick high that came in 2021 before it put in the actual all-time high at 69. $65,000 was the first wick high in 2021. So, that is that's going to be a key level in and around that area. But you can see that locally after the first big downtrend. Now, yes, we did have lower highs in the midst of this uptrend over here, but the first big downtrending lower high was actually put in right at the 67,272 level. And then the second big lower high was at 65.5 of the original downtrend that formed in this range before higher lowing its way up here. And you'll note that what was holding price up at the double top up here at $72,000 and $68,000 on the close. And yeah, this was, what was the close? No, I'm sorry. This was 68. This is 71 and a half, but this was the $72,000 double top on the wicks. What was holding price up? Well, it was this first major lower high of this downtrend here. And this area even acted as resistance. So you see this little bit of a closing high and swing high structure here. That was the first lower high before we got the rundown to 53 and a half. Well, guess where it found primary resistance when it did try to hold this zone as support between this lower high at 65.5 and 67.272. It put in a pinner right at 67.272, lost the zone, and then came down to the next levels. So anywhere above 65.5 or 63.800, the primary overhead resistance on the daily is going to be 65.5 to 67.272. If we do see any closures above there, even in the medium-term timeframes, I'd look right up to $68,000 to essentially $70,000. Technically, the level is 68,298 here to 70,187, but essentially it's 68 to 70. It's actually 70,000. Yeah, 70,187. But I just call it 68 to 70. You can see the closing resistance here at that $68,000 level, and then the wick right to 70. That was bang on that call, by the way. That's $70,000 even. So this is, kind of what to look for to the upside. Again, it's the same criteria to the downside. If we start seeing this level here at 58,400 breakdown, look right to Monday's low, and that's at 57,820. Anywhere below there, close open to the low side of the range is going to get ran. So essentially it's between 58,400 and 55,850, this close open over here. If we start to see that breakdown, we can start eyeballing this $54,000 level, but realistically, I'd be looking to the wick low at 53.5. Any closes below there? Yes, there is a bit of no man's land and wick catching zone between target one and the big zone at the danger zone here in red. But that's 53 to 50. That was the big weeklies from 2021 that Bitcoin retested at $53,000 here back in February, and then found support off those 2021 weeklies as well in February before taking off to make the new all-time high. This is a key area. There's a little bit of a pit stop before making an all-time high. So this zone, I would be looking to get filled out on any closures below, very specifically, $53,000. That goes for, probably medium-term timeframes to daily timeframes, so probably 6, 12-hour, and daily. Then I'd be looking at target one of distribution down here. And, the zone is fair game between 53 and 50. And even the wick low is fair game now at $49,000. Not until I saw closures below $49,000 would I start eyeing target two down here. I'd need to see at minimum daily closures. Target two of distribution is the prior cycles or the bear market lower high. It was the first lower high that kicked off the bear market from 2022 in this case. And that's at 48,240 on the wick, 245.5. You'll hear me generally refer to this zone as 45 to 48. So 45 down here to 48. You might notice the electrical cost down here. And that is for those that may be new to my analysis, this is the basement or the lowest cost. The only factor here is the electrical cost, basically to mine Bitcoin. You can think about it like the electrical cost to run the network. Essentially, it is not factoring any other costs for miners but electricity. And it's very, very rare to see Bitcoin closing under it for very long. It just so happens to be lining up perfectly with the close open lower high from 2022 that kicked off the bear market there at 45 and a half. So that would be kind of emergency wick territory, and not unless I saw consistent closes in the target two of distribution. Could it wick through? Sure, it has many times before, but not by much in some extreme scenarios. But usually electrical cost is the catcher here. The only way that I would be looking too much lower than that is if we see a consistent downtrend where we start seeing competition on the network come down, therefore electrical cost comes down. So you essentially get miners turning off machines to save money, which lowers the overall electrical cost, which then you would start to see this trend down a bit more. Now, there is another target 3 of distribution, but I don't think it's worth really talking about. It is between 42.5 and 38,500, which is a big monthly. But that's not relevant right now because electrical cost has been very stable in and around, and even rising to this 45.5 after dumping off to around 42.5. So in this case, keep an eye on the conditions. Below 58.4 for local stuff, at least for right now. 58.4, then we're looking at the zone, at least you want to see it holding up at the wick around 57,820. If it starts losing that on medium-term time frame, closes below the daily. Probably looking down into the rest of the zone here to get filled out somewhere around 56, 56.5 to the 55,850. And then just eyes on any closures below there because likely it's going to run the lower low close, possibly work its way into target 1. But if we do see a close above 60,300 essentially, then we're looking up. 61.8 if it hasn't already hit it, 62.8 above there, 63.8 to 64. Any closes above there, we're looking roughly 65 to 65.5. And that 67,272, you really want to see closes above there. If bulls can prove their might and push back above there, then we can start looking at $68,000 to $70,000 again. Take out that lower high. Well, that's going to lead us into the weekly, but that I'll talk about in just a moment. But then we are looking at the highs and higher and likely a bull run. So the bulls have an opportunity early this week if they can really dig in this area and start to recover the recover zone. Now that's, basically trend that we've talked about and support and resistance. Now, I want to show you volatility and the volatility levels of interest because you can see that Bitcoin had its expansion. We saw the not really aggressive expansion, but a very nice trending expansive move down to that 53.5, even a perfect rejection at the basis band here. We saw the higher low. This was the big higher low off of around that 56.5 level on the wick low. And then we saw the breakout and close above that 63,800 level. And then that was the trend reversal, the higher low to higher high here. Confirmed the reversal. We got another higher low, higher high, higher low, equal highs, and then boom down into this major downside move. It's essentially just got to claw its way back up there. And what we saw was that we didn't really, and I mentioned this at the time, we were still in a fairly high volatility environment. We had a fairly moderate expansion down. And then when Bitcoin hit the upper second standard deviation of the volatility levels of the Bollinger Bands in this case, it got more aggressive expansion to the upside, but it was basically against its entire downside expansion. We saw it hit that upper second, try to turn things around and hold it, oscillating around the upper first, and then didn't even try up for the upper second, which it did have an opportunity for because of the overhead resistances. But then when it mean reverted back to the basis band here, we saw another compression, and then we got expansion down. And now we're back to compression. So this is where we need to see where there's confluences. And you can see the upper first standard deviation is at 61.8 right across this close open and these wicks. Get above there, 62.8 is fair game. Guess what's above there? The overhead resistance at 63.8. That's this high over here. What's right above there? The upper second standard deviation of the Bollinger Bands, which is essentially acting as a level of volatility or a volatility metric. In this case, if it were to get expansion or price usually will only get expansion above, aggressive expansion above the upper second and below the lower second. But if it can hang out in the zone, in the recover zone above the upper first, it can start to flatten the bands and then get an expansive phase to the upside on closes above 63.8. You can see where the upper third is, essentially right in that 65.5 to 67,272. So I do think that it's going to likely get first pass rejections, even if it pushes up violently. And because it's moving into this compression phase on the daily. That doesn't mean that it can't get closes above there and get expansion, but I would be looking at any extreme moves like to the upside to be wary of, likely getting first pass rejections. To the downside, below the basis band, which is right in the middle of no man's land here, between this 60,200 to 300 and the 58.4, we have the basis band. That is essentially at around 59,300. That is just slightly lower than today's open at 59.5, 59,455 in this case. So anywhere below the basis in terms of volatility, that gives us the lower first as a primary volatility target. But of course, we would need to see closures below 58.4 that then go and run the lower first, which is right around this low side structure. Close below there, and then we're looking to this 55,850 before getting to the next volatility level of interest, which is the lower second, which is actually right around this wick low structure here at 54.5. Realistically, in a compression phase like this, you can see wicks go through either side. It's not super clean. Sometimes it is, but so what we want to see is what the bears did to the bulls here, just on the other side. So you see how you had you had Bitcoin riding the upper second, comes back to the reaches for the basis, basically rejects at the upper second zone, comes down, loses the basis, and then starts closing below the lower second, getting that aggressive expansion. You want to see the bulls pushing back above the basis, start closing above that upper second, and then you can see how how it took a day or two to get rolling. Sorry. That's essentially what we want to see to the upside in this particular setup from a volatility standpoint when you integrate the support and resistance levels. But we can turn off the accumulation distribution, and you can see above there, if I just kind of hold my cursor and look left, you can see the resistance around the highs here where the upper third is, stuff like that. So there is quite a bit of overhead resistance even at that upper third, at that 67,272 level, coming into a key area there. It's living just slightly below it at 66,500. So, first pass rejections in a very big zone of interest that has already been a rejection zone. That is only if we see price really aggressively move up. Same for the downside. I wouldn't be looking too much lower than 54 on a close unless we started to see closes below the lower second standard deviation at 54.5. Then I'm most certainly looking at 54 probably already got hit, or it's going to, and then lower, and start expansion to the downside. Now, we've covered trend, support and resistance, volatility. Let's go ahead and take a look at momentum. Daily momentum remains to the upside here. This is a fancy-dancy regular Stoch, not a Stoch RSI. I do not use Stoch RSI because I already have an RSI indicator that we're going to look at in a moment. There's no sense in using an indicator of an indicator because Stoch RSI is just the velocity of RSI. I want close over close momentum. We can see that this, as a regular Stoch, is showing us close over close momentum. So this is going to look very different than your Stoch RSIs. $59,000 is the momentum pivot for a regular Stoch. For those interested who are traders, this is running a 6/3/14 255 look back. This is just a fancy Stoch. You can get free ones that have, pivot numbers for when it's going to turn or crossover. You can just search reverse Stoch panel in the indicators. There's a good one by, it's called the BA reverse Stoch panel. And you don't want the on chart. It's just ugly. The panel's much better. Some people like the on chart. I think it's ugly, I should say. The advanced Stoch that I'm using is an indicator from KVDB over there at Eric Crown Crypto. Big fan of the devs over there. Like to support those guys. And Eric's a great trader and has put together quite an awesome team of devs that have built indicators over the years for him. This is a really nice one by KVDB. It's just got extra bells and whistles. It's got DMI, it's got ADX, it's got volatility metrics, and like all kinds of stuff. So you really don't need it. It's extra stuff that I like to look at on lower term timeframes, but for the sake of this analysis, it's unneeded. So, essentially you want to see closes above $59,000 today. That would keep momentum to the upside and in the bullish control zone. That would look pretty good. So in terms of RSI, we're pushing the midline of RSI, and we can see we are above the moving average here. That is a 12-period moving average. If it was going to test back down to this moving average, that's at right around 58.8, 58,900. From where it's currently trading right now, that wouldn't look too great. You do want to kind of see it get continuation in some of these lower term timeframes. But let's look at the next biggest level of interest, and that is the bullish control zone, or the edge of the bullish control zone, I should say. And this is at 66,712. And go figure, what's it, 66, 66 and a half, almost 66.7. Well, that would be the upper third standard deviation. So, I do think that it might take its time. If it does just green candle its way up there, be aware of those lower term time frame rejections. Just understand the levels clearly, and when momentum indicators and other things related to trend start really maxing out on lower term time frames. If you are trading and it does happen to move to the upside, same thing that goes for the downside. Let's find our confluence there. And because we are right at the midline of RSI here, we can look at the bearish control zone below that 12-period moving average. And that is coming in at, what do you know, right around $55,000. So again, $55,000 is slightly below the lower second standard deviation, slightly above the lower second. The lower second's at 54,500 or so. Between 54.4, 54.5. The bands will oscillate as price moves, so they will ever so slightly adjust throughout the day. In this case, we can also see that BBWP is fairly low, but it's telling me it's not ready for a move yet. So let's go ahead and look at BBWP. So we can turn on BBWP, and I have that built into the Landy bands, which is a free indicator that you can get in my X profile bit.ly link there. Just add it to your chart. It is private. It's not publicly searchable, but you can add it to your chart. We're still working on integrating some other things like signals, some soft signals for the bands, and like kind of when alerts are triggered, that kind of stuff. So bear with us. We will have it in the indicators tab up here, searchable in the TradingView public section. But you can see that this is likely not going to hit expansion for a couple days. Maybe today's closure, this being today, I'm recording this Monday, it's a Tuesday candle, so Tuesday's closure into Wednesday, or Wednesday's closure into Thursday is when I would likely look for a volatility kind of reset here from the low volatility to confirmed expansion, if it is going to do it. But right now, this is a cool down phase. So we see this reflected in the bands. We see it reflected in BBWP, which is measuring the volatility of price action as it relates to the bands. In this case, it's direction neutral. So it's just telling us that it's in a cool down phase. So I'm essentially not looking for any really big bad moves, or if we do see really big bad moves intraday, they're likely going to get rejected both to the upside and downside first pass, and then we come back to it. But it would start to look really good if the bulls can close above 60,300. Of course, that's one of the key levels for the recover zone, between 60,300 and 60,800. So keep a close eye on that. Let's go ahead and talk about the weekly. The weekly is still holding that lower second standard deviation of the Bollinger Bands here. In terms of trend, we've got the closing low structure down here with the big swing low. That was into a big monthly level there at 38.5. And then up to, the higher high structure here at 73.835. We had the closing high. We had the higher low, closing higher low. We had the lower high, closing lower high, closing lower low, swing low, closing lower high, swing high. Now we could potentially still see this setup. This setup is still valid, and I want to see this in terms of support and resistance areas, recover all the stuff that we just talked about. But we can skip over that because those levels have been pretty well covered. But by the end of the week, I want to see Bitcoin closing above, And I would say probably this week too, above 62,755 at minimum, 62,800, and possibly even regaining the daily basis or the weekly basis band here at around 63 and a half to 63,800, right? That's key support and resistance level right there. Now, I don't want to see any closes back below the lower first. That would not look good. That's at 60,500. No, I'm sorry. I'm lying. That's price. It's at 59,730. So that's an area that you want to see the weekly close above. We'll revisit this, of course, throughout the week, Wednesday and Friday when I do my shorter videos. But any closes back below here is going to start to look right back to that lower second again. And that is at 55,800. So that's essentially right at the close open here, 55,850 right here. That's that zone just below 58.4. That's the support and resistance level, is both a daily and a weekly close open there at that 55,850. That's where the lower second is. If we start seeing any kind of weeklies closing below there, where it's almost guaranteed we're testing 53 and a half, we're probably filling out this week and probably going for the electrical cost zone between 45 and 48. So that is more likely than not, and probably a daily distribution down into those zones as well for possible reaccumulation. So you want to see closes by the end of the week above 62.8, basically. That would start to look better if it can close even above 63.8, as it does relate to the basis bands on the weekly. And here's a big reason why. We had a big momentum update for Stoke on close over close Stoke momentum. And we see that this is about ready to drop off map. And that is because the momentum pivot is now $64,000, which is just slightly above the basis band on the weekly. So you want to see closures above there preferably. Now, granted, it's like $560 lower. The basis band is versus the pivot at 64K. But that's not a good look for the Bulls. So they do want to kind of make up some ground this week if this is going to turn out well for them coming into the close of August into the open of September. In terms of RSI, there's nothing to really speak of. One of the things that should be a little worrying to Bulls is that if it does start pushing that lower second standard deviation, that would be expansion from a position already having Bitcoin close below the basis. It wouldn't be a fresh closure below the basis and then go into expansion. This would be living below the basis and then closing below expansion to get expansion. So need to see some of these areas hold up for the Bulls this week. If you're bullish, if you're bearish, you want to see them fail here miserably. So let's look at RSI real quick here on the weekly, and then we're going to wrap this up. We've got nothing too interesting just yet. So here's where it might get a little interesting, because RSI is measuring the closes. So it's basically like looking at a line chart. One of the reasons why I had the line chart on to begin with is because we can look at this. We could potentially see a higher low develop. Now, still, you need to see closes above 62,755, 62.8 here on spot for the candlestick chart. But we could potentially be in a scenario where we see higher low closes on the weekly. And that is going to potentially, this low wick area was all the way down there, that 53.5, the first rundown. So we're not going to see bullish divergence, at least not locally, not yet. But we'll come back. We'll revisit this on Friday. I don't think there's not much happening here on RSI. It's at the mid-range. It's not very interesting. I guess one of the more interesting things to point out here is kind of where the 12-period moving averages on RSI, and that is coming in at that $66,000 level. So right in between that 65.5 and 67.272. That is where the 12 period moving average is. The bullish control zone is going to be coming in here at 72,500. So that would actually, if it's tapping on it up there, that would be the equivalent of running that $72,000 level, which would put it, of course, if we saw any daily closures above $70,000, which is the lower high to beat on the weekly. The bearish control zone is down here at $48,000. Essentially, it's 47,935. So that's that big monthly level between $45,000 and $48,000. So we do have confluence both to the upside overhead resistance areas and a major one at that, and then also the downside for support areas and big ones there at that bear market lower high from 2022. To break trending structure, we need to see closures, of course, set a low on a close above 62,800. We need to see the lower high on the weekly taken out at $70,000. Then we're looking to essentially the highs again, 72 and then 73,835. 73 to 75 is the zone above there. And then 75, 78, 78 to 80, mid to low 80s from there. It might be worth pulling the local fib structure just to kind of illustrate this. I know I did this prior, but there's both local and longer term fibs that are going to line up with all the areas that I talked about. I'll kind of discuss those throughout the week, especially if we do see Bitcoin starting to break structure to the upside. So basically break the downtrend on the daily, get a trend reversal, and then, start getting towards the end of the week. And if it's starting to look like it's either has a good chance of setting the low on the weekly on a close, still a lower low wick, but a closing higher low, then we can start entertaining the trend break on the weekly and higher term time frame stuff for some of the deeper targets. But above the all-time high, I'm looking at a zone around 73 to 75, 75 to 78, 78 to 80, mid to low 80s from there. You can see mid to low 80s would be the 1272 here. And I'll pull some of those fibs later this week, but and then 1414 would be that upper 80s into $90,000 level. Even locally, you can see that the 1618 from even the local structure here on the correction for the extensions is coming in at 95. 1786 is at $100,000. So there's your $100,000 target for all those that like those even numbers up there. We've got some more fib structures that we could pull incrementally, and in terms of full fib structure and even from prior cycle and stuff like that we'll get into as the week goes on if the bulls start proving their worth to the upside here. But I'm going to leave it there for today. Again, Macro Mondays videos, I try to keep it around 40 minutes. And then the Wednesday and Friday videos around 20 to 25 as the check-ins. But I want to thank everybody who came to the Landy's Crypto Corner Spaces event today. We had about 200, a little over 200 people there. People jumping in and out throughout, but then listening after the fact as well. I want to thank you all for hanging out with us. It was a great event with Vault Layer, Bit by Bit, and Peace Love. Then had Chris from Block City come up and talk for a little bit. We had so many others. Stuart came up. We had Gigapepe Space Club come up and say a few words. And I know I'm forgetting people, and I'm so sorry. There's a big 100-day giveaway event tomorrow. So if you're listening to this, the Welsh 100-day giveaway event is going to be tomorrow at 10:30 a.m. Pacific Standard Time, 1:30 p.m. Eastern Standard Time. They're giving away a lot of cool airdrops and then also some ordinals. I have taken it upon myself as a representative of the Palm community, the Pepe Ordinals Maxi Ordinal community, to donate a Pepe Ordinal Maxi Ordinal as well during that event. So somebody's going to win one of those. Of course, there's also some Nat Monkeys. That is the Nat Monkeys DMT account on X, and then of course Nat Monkeys on Magic Eden, which is the Ordinals collection, is also going to be raffled off as well. So there's a lot of cool stuff going on over at the 100-day giveaway. I wouldn't miss it. There's even more stuff than that coming during that event, so don't miss it. Come hang out with us, with Bit, Stu, myself. I believe probably Rosar and the rest of the big names from the Stacks community as well. On Wednesday, likely going to see another episode of In the Crust We Trust with Angie and Bello and the rest of the crew over there. Myself, where I co-host with the Pepe Ordinals Maxi community. I don't know. There might be a surprise event on Thursday, and please do not miss Friday. The Friday event is a bit of a time change for me, but the Nat Monkeys Friday event, we're going to be talking with Block City, Chris and Rav. I don't know if Rav's going to be there, but I definitely know Chris is going to be there from Block City, and we're going to be talking to Cordell. So, and I believe, I believe Rich from Cordell, if I'm not mistaken, and I do apologize. I'd have to go double check on that. I could be getting names mixed up here because there's so many different Spaces events. So, all right, I'll leave you with that. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out.